Hello and welcome to Tea Time. I'm Chaiti Narula, and on the show today we're going to be discussing the real estate sector in much detail, the evolving and changing paradigm of 2013 with the CEO of Cushman Wakefield.
On the show this week we have Sanjay Verma, CEO Asia Pacific, Cushman Wakefield.
Nobody minds paying taxes or minds dealing with hurdles. Some of the lack of clarity, I think, hurts it. But in the long run, I think as the government, they have to do whatever they can to bring more investments into the country.
In news, Jason Duffner wins the PGA Championship, the Wanamaker Trophy. And Iron Steel wins Ballantines Taiwan Championship.
What a wonderful tee off, Sanjay.
Thank you.
You look like a true avid golfer.
Thank you.
Good transition from China to Delhi.
Yeah, it's in transit really. So I do come here a couple of times in a year, but I did live in Delhi for a number of years, so it's really not a strange place.
So DLF happens to be your home club?
Yeah, the DLF golf club in Gurgaon, because I used to live there. And one could play there in night, so that was just an added advantage.
So how's golf different in China? How's golf different in Delhi? Where did you start off? Let's get to know your golfing journey better.
I started in Delhi, in Gurgaon precisely, many years ago. And, I have struggled like every other golfer. But I play more for fun and just to be with friends. Right. It's really not at a competitive or a professional level. In China, it's slightly different. There are more courses. And it's relatively less expensive. You really don't have to be a member of a club. You could, form these groups.
That's a wonderful way to go about with this game, because in India the scenario is completely different. It's more elitist. You have to be a member of a club, and it's a very expensive sport to pursue.
Right.
But refreshing to hear that China is not like that.
Yeah.
How often do you play in China?
That has been one casualty ever since I moved to China with my travel schedule. If I can play once in 2 months, that's luxury for me. So last 3.5 years, ever since I moved to Shanghai, the golf has really taken a beating.
What's your handicap?
Wish I could play more.
What's your handicap?
No, you don't want to know.
I definitely want to know with that kind of a tee off.
So let me just sort of not make it look so bad. When I played the best golf, when I was playing regularly, I could do 12.
Yeah.
That was the best. Now if I finish within 100, I think I do okay.
You do okay. All right. Now let's talk about the real estate sector.
Right.
We're seeing growth in capital values to be muted. Do you see macroeconomic factors weighing down demand in the real estate sector in India?
Yeah, they're weighing down both demand and supply. I mean, one would be naive to say that the macroeconomic factors, India and global, would not impact the real estate sector. They are. Having said that, I think the fundamentals still remain very strong. So I'm a glass half full guy. I think there's still a lot of opportunity in this sector in India.
I'm actually going to get a proper, elaborate description from you in the real estate sector as well on this show. But before that, it's time now for me to start off my game and we continue our discussion. Sanjay, now the dynamic thank you so much. Now the dynamic economic scenario and the high correlation of how the global markets perform to the real estate sector in India is something that all stakeholders in this sector need to have a perspective of. What is your demand-supply gap analysis like for the sector for 2013?
Sure. I think for India, you got to look at it from two perspectives. One is, of course, the demand-supply gap, which is an easy answer. I mean, for a country of this size and the degree of urbanization, I think we will have a fairly robust positive demand.
Right.
But that alone doesn't tell you. One has to then look at it in the context of some structural issues with our economy and policies, and how it links to the global or Asia-Pacific situation. So just to put it in one sentence, last 3-4 years, the share of Asia-Pacific in the total sales volume in investments in real estate has gone from 20% in 2007 to about 50% last year.
Right.
And it has actually gone beyond the peak, the only region. So I think there is a fair degree of confidence in Asia. India, I think, has some structural issues that they have to deal with if they want to really leverage the demand story.
Right.
And we've been hearing about GST, direct tax code. We've been hearing about some real estate specific policies such as, the regulatory bill, which is yet to go to the parliament, the land, acquisition bill. And then you have certain issues which have been pending for long, the issue of MAT and dividend distribution tax for SEZs. I think all these things are important. Just demand alone will not be able to pull the sector.
So apart from these structural changes that you just spoke about with regards to government policy changes and many other changes that you just elaborated right now, there are also a lot of concerns with regards to a high inflationary environment, high interest rates as well. This is like a bit of a double whammy for developers.
Yeah. I think it is, and more from a liquidity standpoint. The two things that concern me the most is the inflation and the current account deficit. Anything in north of 3% CAD is bad news for any economy. So what it does is it doesn't let the RBI or the finance minister to increase liquidity. So you can't reduce rates. If you can't reduce rates, there would not be inducement of growth. And that is more important from real estate because traditionally, not being the industry status, it has really been starved of liquidity for construction finance, land acquisition. So yeah, I mean, it is really not great news for the industry, and I do hope that some, and the rupee dollar situation only adds more trouble to this. So you're right, it is a challenge for developers.
So quite a lot of these challenges really pose for the real estate sector for the year 2013 and many more years going forward as well. As Sanjay just pointed out, we're going to continue our discussion with Sanjay on the real estate sector, a few of the challenges, how the declining rupee is also impacting the sector in much more detail on the other side of this break. Take a quick breather right here on Tea Time. Sanjay and I will see you on the other side. Welcome back. You're still tuned into Tea Time with Sanjay Verma of Cushman Wakefield and me, Chaiti Narula. Now let's take a segment-wise outlook on your outlook specifically on the real estate sector. What does Cushman Wakefield really feel about the pricing in the year 2013 and going forward in 2014 as well within each of these sectors? You've got residential, you've got office space, you've got hospitality, retail. What is your take?
I think residential and office pretty much have the same outlook. So what you would see, we see the outlook to be stable. In the peripheral areas, you might see certain softening in capital values as well as leasing. But in the city centers, or what we call the central business districts, because of the lack of new supply, I think the prices will hold. In fact, some areas, they might even moderately increase, depending upon the demand-supply situation. Hospitality is a tough one to pick. It hasn't really fared as well as we thought it would. Now there are a number of indicators with the, interestingly, the rupee dollar situation might actually help tourism. And some of the developers who were building hospitality assets did really have a shortage of funds. So some of that curtailment of supply might actually help the sector, and it might have some sort of a modest recovery. Retail has been a good performing asset, but one has to look at it in context. When people generalize retail, like in China, some people will say retail is a fantastic success, and you would hear these stories of these ghost malls where no one is there. My take is in retail, if you build a bad asset at a wrong location, anywhere in the world, it won't work. If you build the right asset at the right location, it would work. Retail as an industry, I think, has a huge potential in India, given of the undersupply of organized retail. So I think the fundamentals are in place. People who will make well thought of assets, taking care of the research, will do well. And I think there is absolutely continued demand for retail.
Interesting. Let's play a bunker shot now on that note. Sanjay, in the residential space, which are the top 10 cities in India that have performed well since the downturn of 2008?
I think with the exception of maybe Kolkata and Hyderabad, pretty much all the major cities have performed okay. If you look at the peaks before the financial crisis, almost all cities have sort of crossed those peaks in capital values. And we're seeing moderate to continued growth. Like I said earlier, in the peripheral locations, I think that story might get subdued in the coming years.
Sanjay, staying with cities and talking about cities, will Pune continue to grow? And we are also seeing a subdued growth in Chennai as well. You see any chances of a turnaround in these two cities?
I would say yes for Pune. I always believe I never get driven by the stock market or the rallies. You got to look at the fundamentals. If you look at Pune, it's a growing, sort of a city. It has a lot of population of manpower, engineering schools and all kind of educational institutes. It has recently been, surrounded by a lot of industrial activity, which means there'll be jobs and there'll be need for housing, etc. So I would say yes, Pune would have a lot of potential. Chennai also, one of the prominent centers in the south of India. And because the values in Chennai, if you compare to Bombay or NCR, and in absolute value are still lower, so it'll, I think, continue to grow. So both these cities are, I think, fairly important cities in the overall scheme, and I think will have growth potential. Now, the quantum of turnaround, how quickly, that really depends on a lot of other things. But I think both the cities have inherent fundamental strengths to grow. Very nice.
Right down the green.
Yeah, that was a nice shot.
Nice. Thank you. Now, Sanjay, the urban population is on the rise. It's expected to cross about 590 million by 2030 as well.
Right.
How does that impact demand in the residential areas? How does that even impact supply for that matter?
I think that really is the foundation of this whole India growth story,
Really?
isn't it? Not
That's
just for real
evolving
estate.
paradigm that we are talking about for 2030.
Yeah, it's the whole, the Indian economy is really unfortunately not driven by the policy or the state push. It is driven by the consumption story of this growing middle class.
Right.
And it cuts across industries, FMCG, banking, financial services, and real estate more importantly. So yeah, that is going to be the main driver. However, one has to be careful that alone will not be able to sort of leverage this opportunity. You have to augment it with the right policies and, more importantly, infrastructure, which has really been an Achilles heel for India. And we hear noises, of late again we heard noises about this, the program management, office and everything else. But I think that really is what's sort of dragging India behind.
What are the kind of policy changes that you would like to bring about in this country if you were to be in the chair of decision maker?
Like I said,
You're wearing that hat. I mean, this is purely from the perspective.
I mean, one has to also understand there are a lot of constraints in the kind of politics we have and the democracy. So one has to be careful not to give these sweeping statements. But I would say just a couple of key ones. If we can just roll out GST and direct tax code, that would just give a huge fillip to the GDP because it's going to make things simplified. And then there has to be focus on execution and infrastructure. What we lack, I mean, a lot of people, after having spent so much time in China, people compare China and India inadvertently. If I look at now, the biggest strength of China is not really anything else but execution.
Right.
They are really good at execution. And then, of course, once you're good at execution, you'll get funding. There are a lot of players internationally who want to invest in infrastructure because there is the base of the population. There is demand here. So all the ingredients are there. If the government can facilitate execution and increase the velocity of their investment, I think then we have an extremely good story.
Okay, on that note, it's time now for us to take a break. On the other side of this break, we will continue discussing about the evolving paradigm of 2013 in the real estate sector with Sanjay Verma, who's the CEO of Cushman Wakefield. Thank you for staying with us on Tea Time. Sanjay, now FDI of up to 100% is allowed, of course, with the government's permission in evolving and developments and settlements and townships as well. And through the automatic route, they've allowed FDI in hotel and tourism as well. Is this an uptrend which is here to stay?
Yeah, I think the increasing FDI in India, I think, is a definite answer to a lot of our problems. This
Right.
rupee-dollar situation,
Yes.
investment in infrastructure. And I think so far, it has been a good story. Also, I was very pleased to see recently they, allowed increased FDI in telecom, aviation, defense. So
Yes.
I think it's moving in the right
The
direction.
good news that came in last September as well in 2012 was about FDI in retail. For a long time, I think the real
That
estate
one
sector
has
was
to-
waiting for that
yeah,
one.
one has to read that in context of the politics.
Actually.
And the sad part is, I've always been, even when I was in India, I was part of interest groups with CII and, FICCI to promote this. I think that can be the best thing that can happen to farmers and, the supply chain. So it got announced and then some political parties opposed it. It's become a bit of a political endgame, which is not good. And I hope that it goes through. We did see some interest. In the first quarter this year, we did see about 60 to 70 proposals getting cleared. But it hasn't created the kind of momentum as I thought it would. And I think people overseas are a little bit cautious. Any of the investors or retailers I meet globally, they all want to be here. And completely driven by the consumption story.
Right.
So, but other than that, FDI, I think it's an uptrend. Like I said, we still have to come clear on some of these tax avoidance rules, GST. More clarity, and sooner we bring that clarity, I think will help the investors to really calculate. Nobody minds paying taxes or minds dealing with hurdles as long as they know what you have to deal
Absolutely.
with. Then you build it and deal with it. Some of the lack of clarity, I think, hurts it. But in the long run, I think we have to, as the government, they have to do whatever they can to bring more investments into the country. It started off well when it started off, and I think last few years have been a little bit of a dampener. I think it will pick up again because FDI is driven by the strengths in there was the United Nations Conference on Trade and Development. Last year's ranking put India as number 3 after US and China as an investment destination. And I think that's pretty significant. That's driven by the strength of the economy. But we have to sustain that. We have to do things around it. Nobody's just going to parachute money into the country just because there is policy.
Sanjay, staying with FDI, the biggest disclosed deal was, of course, the acquisition of DLF asset shares by Karaf Builders for $696 million US. Tell me more on such deals.
Yeah, but that specific deal, I mean, I'm not going to get into detail because it's in public domain. But, put that in context.
That was the biggest disclosed one, actually.
Yeah, because it was more of an internal sort of integration. Karaf is the holding company of DLF assets. So this was more of making that balance sheet more efficient. And they wanted to bring in synergies of management and everything. So this was more a DLF deal, whatever I've read. And I have to also disclose we were one of the consultants.
Which are good news for.
But yeah. So what's happening, I mean, if you look at the FDI or private equity that comes from overseas, we see increasingly they want to invest in residential projects at a development risk, and the reason for that is residential projects are self-capitalized. Within 3 years in India, you sell unit by unit, and you can basically realize your money. So there, although there is risk. In office, we don't see development investment. There, we're seeing more and more foreign investors wanting to buy assets that are already leased. If you put that in context, I think foreign investors still have a little bit of caution when they want to take development risk in India. In residential, they're able to take because they think there are returns to be made. Some of the other countries, people are willing to take more development risk, like in China. Short answer, yeah, we're seeing more and more such deals. Unfortunately, we still don't have the kind of scale in India in terms of quality assets as some of the other markets will offer. But I would reckon to believe that with demand, we'll continue to add more quality assets, and this will be an uptrend.
Now, shifting focus a little bit, I haven't gotten your outlook on SEZs. How does your outlook remain for this year?
They recently, you must have read, changed the policy. They made it a little more lenient, hoping investments would come.
Yeah, in the light of that.
Yeah, and it hasn't come, and I'm not surprised. Because there are two very nagging issues with the SEZ policy, and which the promoters and developers have been trying to argue with the government. One is the dividend distribution tax and the MAT. I think until we solve both of them, it really is not worth the effort for a number of people to get into new projects, because the number of clearances, it's a very sort of a tedious process. And it's not that viable. So unless those two are addressed, now I'm not saying we should make them exempt or not, but I think they have to be put in the mix when we make the policy. So my sense would be, after this new policy, the ones which are already notified or under construction probably might see some pace, but I'm not really going to see a floodgate of new projects being announced, because those two issues remain very, very at the core of the challenge for developers.
Cool. Let's finish our game and we continue talking. Electronical engineering, Sanjay, how did you find yourself wearing a CEO hat at Cushman Wakefield? Really?
Completely by accident.
Tell me the story.
So, yeah, I graduated from Delhi College of Engineering and then worked with Voltas, partly in Bombay and then in Delhi. That was mostly dealing with engineering projects and some actually real estate projects where they used to supply equipment. And then I went to MDI, Gurgaon, post-graduated in marketing and finance. And after that, most business schools, I always say, first job is where do you land up by way of campus placement. And I joined this firm called Colliers Jardine. Got drawn by the Jardine name because it was a trading house in Hong Kong. and realized this was a real estate company. It was a new sector, and I thought that was kind of interesting because globally this sector was
that kind of an accident, really?
Yeah, it was. I mean, you know, when you are in business school, you sit for these interviews, you want a certain job. I actually, interestingly, wanted to be in advertising, and I got rejected by the 3 firms that I wanted to work for. I guess in the end, it all turned out okay. So I joined real estate, and then realized, you know, this was an emerging industry. This was an underdeveloped industry in India. And there was a lot of opportunity if you wanted to take the risks. And I guess then I just sort of grew with the industry. Was lucky to then move to Cushman Wakefield, which is really where I found my mentor.
And who would that be?
There was this guy called Michael Thompson, who was the then CEO of Cushman Wakefield India. He moved on to become the Asia CEO, and then he took a sabbatical, and I took his role as the Asia CEO. Which turned out okay, as I said, and I take pride in saying, of all the firms in our business, I must be the only Asian as the Asia CEO, and which is kind of interesting. So, which is a good recognition of the kind of professionals I think we produce in India. So, more and more people are now getting recognized. In the real estate
Are you imbibing a lot of golfing culture at Cushman and Wakefield as well, or still to set in?
Golf is a teacher for life, not just business. It teaches you humility, it teaches you patience. So golf is, I think, is a teacher for everyone. You know, it teaches you, you can't take anything for granted. Life is full of bunkers. You got to deal with them. You can't change them. So yeah, I personally, I can't really implement it in Cushman Wakefield, but I think personally, anybody who plays golf, depending upon the individual, can learn a lot.
Who inspires you the most? Which player?
From the old times, Jack Nicklaus. I was a huge fan of him. I rate him much above Tiger Woods because the span, for a number of years. I think Tiger peaked and there was those 3 years, but I think Jack Nicklaus. From the new
Phil
ones,
Mickelson, let me guess, just because he won the US Open,
no.
isn't it?
I mean, I have been following his career. One, I think anybody who plays with the left hand, it just looks more elegant, isn't it?
Actually.
He's the best left-handed player ever. He and people like Ernie Els, they've really grown under Tiger's shadow. And it hasn't been easy. He hasn't won as much as he should have.
Yeah.
And that's when you're winning, then nothing succeeds like success. You play golf, you're winning around, even the bad ones go good, right? So for Phil to be playing under his shadow and still continuing that winning streak, and I just like him as a player. I think he's the best putter, which is where the game is won.
So nothing really succeeds like success. On that concluding note, thank you so much for joining me on Tea Time. There was Sanjay Verma of Cushman and Wakefield and me, Chaiti Narula, signing off. I will see you next week again. Until then, enjoy the flight of a good drive.